Yo, 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 we had to start a little early today. Now, the question is, are we live? Are we recording? What are we? I don't know. Look, you know how bad this is, Jolene?
What's up?
I don't even have any water, no refreshments, no nothing. So
Oh,
look,
no.
It's going to be that type of day, but it's okay. Because you know why?
All right. Why?
It's earnings season, and we're already starting off with a bang. And we're only 21 days into 2025. And look, we doing a lot. But anyways, what's good, everybody? I am Mark Monroe, accompanied by my wonderful co-host, co-producer, co-creator, and all things galactic. Give it up for none other than
It's the 92%. Shalyn GC and the place to be. And a part of that 92%. Okay, the day after inauguration, first trading day. Post
yeah.
MLK.
And it's time for a showdown. It's definitely time for a showdown. So you all had definitely did what, hey, we asked you to literally come forth with the 750 likes. And we said, if you bring the likes, we will bring a guest and everything else. Now, I don't know if they're ready yet and everything else. I don't know if they're here yet. Oh, well. Oh, okay. All right. Well, here we go.
What's good? What's popping in 2025? Happy New Year, Mark. Happy New Year. Happy New Year, Jolene. Happy New Year, cousins. It is me. I'm back. Chukumba,
yes, sir.
Keeping it real, cousin. So what's good? Let's get it popping.
Look, I remember the last time that you and I were on the same stage with each other, and I remember we were trying to keep it kosher. How did the person say? I'm trying to keep it PG, and then next thing you know, it just
here's the thing, Mark. Okay, well, a couple things. Okay, first off, I got to keep it real. You were taller than I thought. Okay, for some reason, I had it in my mind like you were like 5'6", like 5'7", and like and I get there, and I'm not a short guy, right? Like
no, you're not.
And you're like 3 inches taller than me. So that was a surprise. You guys are both celebrities. Everybody, you had your little entourages and whatnot. I'm like,
no, I didn't have the entourage.
No, you guys both had your entourages, your hangers on, so forth and so on. But anyway, we did our thing. And, look, I was trying to keep it, very demure. And then the other dude, Mark Mahaney, he just started going off. He just started going off.
I was like, yo, he's teeing off. I was like, oh. I look over at you. I was like, so what you gonna do?
I know there was all kinds of rants going on. Like I was not expecting that. Okay, I was keeping it here. He kept it there, and then I had to bring it all the way up here. So it just got crazy out that bitch. Sorry. Wait, can I curse on this? Can I curse?
Yeah.
Okay. All right.
You live, so go ahead.
Yeah, I guess I just did. But anyway. So great to be back. So great to see the two of you.
Likewise. We're so happy you're here.
Happy to be here.
Oh
my what? No, hell no. Okay. Paul Sue from Decasonic is on here. He's trying to troll me. As I told these guys earlier, he's been trolling me consistently for the last week. We can get into that. It ain't right.
Active.
Shit ain't right. Okay.
This is about to be active. I don't know. Look, I have this feeling that we're probably about to break the internet. So, and I'm with it. Look, the gloves come off in 2025. Look, see, he already started. He says, not trolling, just wondering what boomers think. Whoa.
You know what? Okay, let's just start it off 100. Okay, let's start off 100. Let's start with a little story. Okay.
All right.
As some of you know, Paul and I used to work together literally over 25 years ago. Okay.
Yes.
Paul tells this story over and over again about how supposedly he was like, hey, let's go to Silicon Valley and form a tech company. I was like, oh, no, the internet's a fad. And so I went on with doing my old economy stuff. Like he went, and did all his things. Now he's this big VC and blah, 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 blah. So that's one way he trolls me. Okay. So we reconnected probably 4 or 5 years ago. Turns out we both live in Chicago area, right? He's doing his thing now. He's got his VC fund, crypto, Web3, DeFi.
Shout out to Decasonic.
Exactly. Bunch of other buzzwords, whatever, right? So the dude is telling me, okay, and this is like literally like 3-4 years ago. He's like, Anthony, like you have to get into crypto. You have to buy some crypto. And and to be clear, like he wasn't like put all your life savings in crypto.
Right.
Like, you need to have some exposure.
A nice exposure to your portfolio.
Completely. He's like, maybe buy like 1-2% of your portfolio, whatever. Like, so my whole thing was like, look, I don't invest in anything I don't understand, right?
Facts.
So over the course of literally about 2 years, I read like the original white paper. I probably read 3, 4, maybe it was 5 books, many of which were recommended by Paul. I still didn't understand that shit. I still didn't understand it. I didn't. Real talk. So I never got around to buying it.
Okay.
I gotta ask Paul, did he get it on Trump coin or Melania? I like coin.
Why we gotta go there? Why we gotta go there, Mark? Why we gotta go there?
Wait, hold on.
Why we gotta go there?
Hold on, time out. You came on. Wait, hold on.
Interrupt.
You came on the stage coming on with smoke. Look. It's time to light it up. Like, oh, that's the energy. You know what? My bad. I apologize.
Anyway, okay, let me continue to my story.
Go ahead.
So, okay, I have this coworker that Paul knows, a guy by the name of Patrick Ripley. Okay, he is sort of leading our nascent Loop Capital sort of crypto initiative, which very nascent. We're basically doing nothing. Okay. He's always talking my ear off about crypto. Okay. Finally, he literally gives me this book by Lynn Alden about like, I can't remember the name. Paul, can you put the name in the chat? Because I can't remember it, okay? I can't remember it. But anyway, the whole premise of the book is that fiat currency is terrible. It's basically intrinsically inflationary.
Broken money.
There you go. And crypto is sort of the answer, right? So, okay, I read this book. I read it cover to cover, okay? By the way, painful read. Don't recommend it. Just painful, okay? But I read it cover to cover, and okay, it definitely, like, I'm like, okay, I intrinsically understand at least the argument she's making about fiat currency. Yep. But I gotta be honest. Like, I was like, okay, if this dude bought me this book, okay, I got to do it. I got to buy some crypto. Okay. I got to buy some crypto. Like, I can't have this dude buying me this book and me reading this book and still not buying crypto. So almost out of guilt, I bought crypto. I bought a little, basically, 1-2% of my portfolio. So not a huge part of my portfolio. Okay. I bought that shit about 3 months ago. And to be clear, okay, I didn't buy actual crypto. I bought the BlackRock IBIT ETF, right? Which basically mirrors crypto. Okay, see, you're getting shady already. Okay? Look, I bought crypto, okay? God damn.
You want some credit for that, at least.
We're literally about 10, we're not even 10 minutes in. Anyway, so I bought the crypto, okay? So last week I caught up with Paul. We just hadn't talked in a while. I actually texted him. I was like, dude, I finally bought some crypto. Like, we should catch up or whatever. So I basically kind of tell him the story about me buying the crypto. And he basically was like, oh yeah, that's what all the boomers are doing. All the boomers are buying that exact BlackRock ETF that you just bought. Like, once again, Anthony, you are a meme, okay? And I was like, damn, like, here I am thinking like, okay, maybe I'm not that much of a boomer anymore. Like, I bought some crypto and this dude is dogging on me. So a brother just can't win, okay? I can't win. Okay? So I'm not even gonna talk about the AI part of the story. We're not gonna go into that. But anyway, let's continue.
I don't even know where to go from here. Like, what?
I mean, you might as well just keep it hot and just go.
Look. I mean, look. I don't think. Look, me personally, mm-hmm. I'm trying not to gaslight.
Okay.
I don't know if I would have told anybody that. I don't know
Dude,
if I would have told
it's
anybody
like
that.
you want me to lead. It's like you want me.
I don't.
to lead.
But I didn't force you to tell the story. You told the story. That was a listen. That was a we listen and we don't judge story without the premise.
The funny thing is, here I am. I'm like so proud of myself. I'm like, I finally bought the crypto. I timed it really well. I mean, and to be clear, like I wasn't trying to time it because I was like, I'm gonna just own this for a really, really long period of time. But like I'm up like, I don't even know, like 60, 70% or something in a very short period of time. You know, not that I'm trying to, whatever. I'm not, you know, like I said, I'm going to hold it for a really long time. Okay. And like everybody's dogging on me. Everybody's dogging me. You know what? I wasn't going to tell this part of the story.
You dipped your toe in. So
I did my toe in, and you know, I wasn't going to tell this part of the story, but you know, you're just trolling on me, so I might as well tell it anyway. Okay, honestly, I bought this crypto for two reasons. First off, I bought it, you know, because like I said, like
peer pressure.
Right, peer pressure, Paul, like, you know, whatever. But the other thing, I gotta keep it real. Part of it was like, you know what? If Bitcoin goes to like $1 million a coin, right?
True.
From like 100,000 or whatever now, like I don't want to be that fool who everybody else is rich and I'm broke because I never bought the crypto. Okay, I was just like, so literally, it was my FOMO purchase, okay? Fear of missing the fuck out, okay?
I was gonna say,
I was with you for a moment, but then you just said you bought something for FOMO.
Look, it's like 1-2% of my portfolio, okay?
Hey,
diversification.
I escalate this. I'm gonna escalate this to a higher power because this is above me now. So.
You know, I'm gonna
escalate this to BlackRock.
Let's talk about retail. Okay, look. We both know, and this confirms why you brought me on.
That is true.
Boomer DEI. Okay.
Oh,
there,
wow.
I said it. Boomer DEI. And you know, we have to do this shit now because there might be an executive order tomorrow that says no more Boomer DEI. Okay, we got rid of the regular DEI. We're gonna get rid of the Boomer DEI. Okay.
It's true. It's true.
Let's talk about some boomer shit.
Okay, so since we're gonna talk about some boomer shit, let's talk about retail. Like, I think that's a great segue.
Wonderful segue. Wonderful.
That's a great segue.
Wonderful.
All right, so
okay.
All right, so we're gonna reset the room.
Reset.
Take a deep breath. Okay, are we all centered? You good, Jolene?
I'm good.
Bro, you good? Ant, you good?
I'm centered.
All right. Bet. So let's talk about retail stocks. Let's talk about GameStop. I mean, no, we're not going to talk about GameStop. We're not going to talk about GameStop.
Mark.
No.
Okay, Mark.
I'm sorry.
Last time I was on this podcast, I said, and if you recall, Joe Rogan had just said the N-word, okay, on his podcast, and I said, Joe Rogan can't say the N-word. You can't say the G-word, okay?
Okay.
You can't say the G-word.
All right. I took it back. I called it back as soon as I said it. All right. Look, before we keep going on this, like, I already have a feeling that we're going to have another crash out moment. So let's get some data in between.
Okay.
Jolene, girl, help me. Because look, your voice over here drowning. All right. So let's talk about retail stocks, though. Like, in all seriousness, you guys came here for some great data. So let's talk about retail stocks. We're now in earnings season. We just had the December where we saw a bit of a sell-off in tech. We also got some economic data that was, and I definitely want to get your thoughts on like what is that we've heard. Mm-hmm. But let's start off with the state of retail. Let's talk about the state of retail. Last time that we were in the same room, we were talking about like, okay, hey, how does AI play a role into also like where we're probably not even seeing it, how it may also have an impact on retail brick and mortar stores. So, and that was back and forth between you and Mark Mahaney.
Yes.
We're not gonna hash old wounds. So we're gonna look forward in 2025 towards the future. All right. So with that being said, Anthony, where are we headed as it pertains to, in your perspective, where are we headed in retail? Let's talk about the state of the retail sector first.
Sure, absolutely. So, yeah, I mean, look, 2024 overall, like I'm talking at a very high level, was pretty good for the retail industry.
Yes, it was.
Basically, what we saw pretty much all through the year was that unemployment stayed pretty low. Wage growth was pretty good. Wage growth was actually higher than inflation because we did see inflation steadily come down.
Yep.
Consumer confidence was pretty good, particularly towards the back half of the year.
Yep.
Okay. We also, saw gas prices, come down over the course of the year. Now the housing market was a dumpster fire, but it was a dumpster fire pretty much all year. And so retail spending it did really well last year. And one of the things that was definitely a concern heading into, basically November, December was the US presidential election. And it was a concern from the perspective of everyone knew it was going to be really, really tight. And there was definitely a concern that if a certain person won, then the other side would say, oh no, it wasn't fair, and yada, 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 yada. And it was 2020 all over again. And then we were going to have a January 6th too. Okay.
Yep.
Now that did not happen. We knew that night who had won. Okay.
Yep.
And so that really eliminated an overhang that I quite frankly, I was concerned about for the holiday selling season. In addition to that, there was definitely a perception that, the person who won would be better for retailers, much more pro-business. And so we saw this really nice sort of lift in retail stocks, post-election.
Yep.
Now, so now we're turning the page to 2025. And a lot of those macroeconomic factors are still very much in play, right?
Mm-hmm.
The concern, the overhang is two things being talked about by the Trump administration. Okay. The first one is tariffs, right? Now, look, once again, I'm going to keep it real, but in a very sober way. And I don't really care who you voted for. Tariffs are a tax on consumers, period, full stop. Okay. That is not a political statement. That is the reality. Okay. Now, we had a really strong day today in retail stocks because it looks like the early indications is, no immediate tariffs on China. That can obviously change. It looks like it's really more on Mexico and Canada, but U.S. consumers import a lot more from China than they do from Mexico and Canada. But obviously, like I said, that can change on a dime. If we get widespread tariffs, that will be inflationary. That will be bad for consumers. Okay. So that's the one thing.
Hold up. So like you said, anything can change on a dime. Yes. So as it's been reported, as it stands right now, Trump says he's considering a 10% tariff on China beginning as soon as February 1st.
I mean, okay, 10%, I think people can live with.
I can live with it.
Because he was talking about like 60%. So people can live with 10%.
Okay.
Okay, so that's the first thing. The second thing is mass deportations.
Yep.
And once again, not a political statement, but if you get rid of a bunch of folks, right, who do a lot of jobs, low wage jobs that a lot of other people really don't want to do, that will likely be inflationary. Yep. So, look, it really comes down to like how many deportations are we talking about here, right? I mean, if it's not a super significant number, maybe it doesn't move the needle a whole heck of a lot. It isn't that inflationary, but quite frankly, that is something that folks are concerned with. So those are really the two overhangs. The one other thing I will say is that, at this point, retailers, we haven't actually seen any actual like fourth quarter results, but we have seen a lot of holiday selling season results from a number of retailers, and they have across the board, for the most part, been very, very strong. I mean, certainly better than we expected. So, I think about like a Target who certainly had their struggles. In my coverage universe, company National Vision, better than expected holiday sales results. Savers Value Village, better than expected holiday sales results. There's a company called Our House that, that's kind of in my, coverage area, better than expected holiday sales results. So it looks like And the numbers we've seen from from the larger sort of industry associations as well. So it looks like the holiday selling season was better than we expected. And like I said, I think part of that was the fact that there was this concern about a potential election overhang, which did not happen.
Got it. So it's actually interesting that you mentioned like some of the companies that you covered, because I think this is kind of like a breaking news for the cousins. So you've actually added 2 more companies to your coverage, if I'm correct, recently. I think it's Shopify and American Sports and Outdoors. Is that correct?
So, okay, so it's Shopify and Academy Sports and Outdoors.
Got it.
Yeah, they are not. Just to correct you a little bit. Yeah, Academy I've definitely added since the last time we spoke. Shopify I was covering.
Got it.
Yeah, those are 2 of my top ideas for 2025.
Let's talk about it. Let's talk about it.
Absolutely. Well, okay. First, because once again, everyone who's on here thinks I'm a fucking boomer, and I'm going to prove a little bit that I'm not. One of my top ideas is Shopify. Okay, Shopify, not old economy, new economy. Okay, not old, new. Okay, and basically I upgraded the stock. I've covered it for quite some time. I had a buy on it for a long time. Worked out spectacularly for me. Downgraded it. That actually worked out really well for me. Well, I've recently upgraded the stock from a hold to a buy rating. Okay. So I am saying buy the stock. I have a $140 price target, so significant upside from current levels. And a big part of my upgrade thesis, my investment thesis, the reason I think you should buy the stock right now.
Yep.
AI, baby. AI.
All
That's
right.
right. I am a boomer. A motherfucking I. Okay.
Yes,
okay.
Finally said it.
Okay.
Yes.
Crypto and AI. Okay, so don't call me a fucking boomer.
Ladies and gentlemen, he is now upgraded from boomer to Gen X. Ladies and gentlemen, he has arrived. He has arrived, ladies and gentlemen. Anthony Chukumba.
Well, Anthony, what specifically about AI?
Yes, absolutely. Great question. Okay. So, let's just back up a little bit. So, so Shopify, basically their business model, it's a wonderful business. I mean, one of the best business models of any company that I cover, from just from a purely fundamental perspective. So basically, they are a software as a service, SaaS company, and they provide e-commerce platforms, right? So in other words, like if you are a retailer, and a lot of their customers are literally what we call SMB, small and medium-sized businesses, who don't have an online store, who decide to go online for the first time. And so Shopify provides them the end-to-end tools to do that. So you can set up a website, a very slick website. You can integrate that with Amazon Marketplace, with Walmart Marketplace. You can sell on TikTok. You can sell on Instagram, Facebook. You can have literally your own online store. Very, very sophisticated marketing tools, checkout. I mean, the whole 9 yards. Okay. And by the way, that I'm just talking about small, medium-sized business. They also have a business called Shopify Plus, which is essentially like an enterprise solution. Okay, so for example, like they always talk about Allbirds, Kylie Cosmetics. Those are some of their big success stories. Now, obviously, AI comes along and Shopify rolls out AI tools to their merchants, right? They've got 2 main products, or one's called Shopify Magic and another one's called Shopify Sidekick. Now, to me, that's interesting but expected. Like that was not why I upgraded stock. It's certainly a good thing, and I think that the merchants are benefit from that. But the reason that I upgraded the stock was because it became very clear to me that Shopify is also using AI internally to run their business more efficiently. So let me give you a couple of examples. Shopify is using AI in their finance department to basically reduce the amount of time it takes them to close their books on a monthly basis. That's like a monthly thing that a lot of companies do.
The monthly reconciliation.
Exactly. Used to take 10 hours. Now it takes minutes. From 10 hours to minutes. I mean, think about that, right? They're using AI in human resources. So if you have a question about benefits or paychecks or whatever, right? Yeah, like you're talking to an AI chatbot. And so the beauty of this is what it means is that because Shopify, they've been growing their top line, 20, 25, times 30% a year over year forever, right?
Yep.
And I expect that to continue, by the way, because they have a better mousetrap, because of the secular shift, from brick and mortar to e-commerce, because they've got this great enterprise solution. Quite frankly, they're even developing really good solutions for what they call offline commerce. So they have some really slick tools for brick and mortar retailers, like, for example, like checkout, point of sale.
Yep.
But what I'm essentially saying is because they're using these AI tools internally, their expenses are not going to grow at anywhere close to the growth of their top line. And so if that's happening, essentially what is happening is your profit margins are increasing. And their profit margins, quite frankly, are already quite high, and their free cash flow margin is increasing. So in other words, like for every dollar of revenue, they're going to have more that's going to drop to the bottom line in terms of free cash flow. And so I do believe that the stock will re-rate over time as investors see the benefits of that. So that was my AI thesis on Shopify.
So Anthony, what about the AI's ability? I don't know if you took this into consideration or if you needed to, but what about AI's ability to help with personalizing the customer experience?
Yeah, that's more the Shopify magic and the Shopify side.
Okay.
Yeah, yes, absolutely. So they're definitely have those tools, and they're very sophisticated. But and to be clear, a lot of SaaS companies have those AI tools, whether you're talking about Salesforce, so forth and so on. But so to some extent, I would have expected that. It was I got a lot more excited. And by the way, I think that will drive better conversion, which essentially drives higher gross merchandise value, or GMV. But I'm more excited about how they're using AI internally
for their operations. And
exactly.
So I'm gonna, like I said, I'm here to stir the pot.
Clearly,
just whoa.
I'm sorry, Mark. That was supposed to be my inside voice. That was supposed to be my inside voice.
I'm like, yo, now I'm catching strays. So all right, so. As you know, we've been hearing a lot about TikTok in the conversation. We've even seen some of the videos where people were crying that TikTok was ultimately gone, and then here today or gone tomorrow, and then back again the next day. All right. And then one of the conversations that kind of spoke up in the conversation, since TikTok has become so big, was the impact on Shopify's revenue. So can you touch a little bit about that? Because I'm probably sure that you're probably thinking about that as you rated the stock. Did that have any impact, given in the sense that if TikTok was banned in the US, or if any of their business operations were interrupted and whatnot, would that have any significant effect on Shopify?
Yeah, it's a great question, Mark. So look, Shopify doesn't give a lot of specifics in terms of where is the GMV coming from. We know that some of it is coming from TikTok. They are very well integrated with TikTok, like they are with Instagram, like they are with Facebook, like they are with a number of social media platforms, Pinterest. It was certainly something I considered, but I guess I sort of assumed that by hook or by crook, there was going to be some type of solution. The other thing to kind of think about is let's just say, and by the way, this is not what I think is going to happen, but let's just say at some point, TikTok is just shut down in the US, right?
Yep.
I think a lot of those folks who were selling products on TikTok, they would just basically then sell those products on Instagram, right? Or Reels or something.
Or YouTube or something like that.
Right, exactly. So it's not something I'm terribly concerned about. But it's funny that you asked that question, Mark, because we literally had a Shopify report out this morning. We do these quarterly merchant surveys, and I got a question from a very large investor, and they were asking exactly that, what percentage of their GMV comes through TikTok.
Okay. And so, because I was sitting there thinking to myself, I was thinking of the mind of the consumer. It's okay, hey, if one part of the funnel closes, then they're going to go to somewhere else, and it's ultimately going to overload. So it'll probably either overload on places like Instagram or YouTube. I can definitely see as a huge place, because it's amazing to me how like YouTube hasn't monetized and turned into a whole shopping like retail space, which I have a question for you. So like I didn't mention this in the in our notes. So look, like I said, here to stir the pot just a little bit, but not too far, because I already see what type of time we're on. All right, so let's say that Google, or as we know, Alphabet, YouTube, literally starts to like really make a play towards retail, like really because of the fact that we have all these eyeballs that are ultimately watching YouTube all day, every day. And essentially they say, okay, hey, well, let's start integrating the ability to not only just like, we really start to add more emphasis towards the retail space. What does like in your opinion, just like you're sitting on the hot seat, so it's coming off fresh. What are your thoughts to something like that if we start to see more digital platforms do that, where they start to like literally flex retail muscle and literally start to go like, okay, hey, we're going to go a lot more heavier into retail? What does that look like for retail in as a whole?
Yeah, no, it's a good question. I mean, I'm just not sure it moves the needle that much, right? In other words, like, look, we have this ongoing secular shift from brick and mortar to e-commerce, right? Like e-commerce is probably somewhere between 10 and 15% of all, retail sales, right?
Yep.
And, so if YouTube suddenly starts selling, like, I think that's part of that 15%, and maybe that 15%, grows a little bit faster because YouTube's involved. But quite frankly, I think part of it's going to be just taking share from other digital players, right? So I'm not sure that would move the needle all that much in terms of like overall sort of like industry market share.
All right, bet. Okay. So, by the way, Jolene, I'm just trying to be respectful because I already noticed I've already caught strays from everybody. So, like, I'm trying to make sure I'm not catching a stray from my co-host here.
No, I'm not giving up no stray.
Do you have any questions? Look, I'm over here trembling. Like, yo, what did I do? Like.
You brought up the G word. Then you called me a boomer. Okay. Then you. I'm sorry. You didn't call me a boomer. You said I shouldn't have told my boomer story. That I embarrassed myself by telling my boomer story. That was so much better, Mark. Much better than just calling me a boomer.
I mean, real talk, you kind of did though. But
okay, I have a question though about loyalty on TikTok. So we're talking about the consumers. Well, we're talking about Shopify basically doing whatever they can as it relates to like research and putting it on different platforms and continuing that trend. Wherever the trend is going, Shopify is going to make sure they're in the mix. But my question is for the consumer side of TikTok, the ones that would be the customers, there is an overwhelming loyalty to TikTok. And what I see is developing into a deep hatred of Meta products, for example. So the likelihood of those consumers moving to Meta it's very low, especially in a particular generation. I don't know much about the boomers, but in a particular generation, they are anti-Meta. They may be more YouTube friendly, but definitely anti-Meta. So does that come into play? Like, how do you even factor that sense of loyalty in that particular type of sentiment?
Yeah, no, it's a great question. Look, here's what it really comes down to, okay? Wherever consumers want to shop, Shopify will be there, right? In other words, Shopify will integrate with whatever is the latest and greatest in terms of the way consumers want to shop. So and quite frankly, Shopify doesn't care where they're shopping, right? They don't care if it's Amazon Marketplace. They don't care if it's Walmart Marketplace. They don't care if it's TikTok. They don't care if it's YouTube. They just want to make sure, right? Exactly. They just want to make sure they get theirs, and they'll make it very, very easy. So if I have a Shopify, and by the way, to be clear, like if I have a Shopify, I'm a merchant, I have a Shopify store, they make it incredibly easy. So I can integrate into all these different, social media networks and marketplaces. And very seamlessly, very easily. I mean, they really have built a wonderful mousetrap, and that's that's one of the reasons that I'm so positive.
It's a buy for you. Okay,
absolutely.
It kind of makes me ask the question now, like as like kind of like switching gears a little bit, right? where we start to see that, okay, we're probably going to be in the Fed cut environment. I mean, I think that that's pretty obvious. As inflation comes down, then ultimately we will see cut. And so, which means that essentially that what we're saying is that maybe cost of capital will start to come down. So given that, like, if that's the backdrop as it pertains to, like, the thesis, right? Who are we, like, who is the, like, in the retail space? What is it that people are asleep? What is it that people are asleep at the wheel at? Like, that they're not, like, paying attention to? Like, who are some of the players that they're not paying attention to that they should be paying attention to? Because of course, the number, like, we know that the Mag 7 takes up, it takes up a lot of the air in the room. But one of the interesting things that we're seeing is that essentially that, okay, bull markets do broaden out over time, and essentially it creates space for other players. So who should we be putting on people's radar now that they it's like, yeah, like for example, you mentioned Shopify, where you have the 140 target. You also mentioned ASO, but who else is there that that people should be paying attention to?
Yeah, absolutely. So, okay, so I just want to take a step back. One thing to always remember about the retail sector is it's a perennial stock pickers market, right? In other words, interest rates can be going up, interest rates can be going down, the economy can be really good, the economy can be really bad. There's always going to be ways to make money in retail, okay?
That's true.
But you have to dig into the individual stocks, and so which goes to your question. So here's a name that I like a lot, and I think there's a wonderful setup for 2025. Ulta Beauty, okay? So ticker symbol ULTA. Now here's the thesis there. Ulta Beauty's basically their top line growth has been slowing over the last several quarters. Now, part of that is that the beauty industry, even though it's still growing, is growing at a slower rate. The beauty industry really, like, was a big time post-pandemic beneficiary, where a lot of other retailers were pandemic beneficiaries. Beauty not so much, because it's like, who was going to be buying makeup when all they were going to be doing was being in their house all the time, right? So, once the world started to open back up, folks rushed out and they were buying a lot of beauty products. Now, that industry growth has slowed down. But the other thing that's happened is that Sephora, they used to have shop in shops in JCPenney stores. Now, they got out of those stores when JCPenney went bankrupt several years ago, but now they've been going into Kohl's stores. And it's actually a much larger shop in shop in Kohl's than it was in JCPenney. And so what was happening was that essentially Ulta was losing market share, particularly in what are called prestige beauty products, or higher end beauty products, as Kohl's rolled out more and more of these shop in shops. Now, here's the setup for 2025. Sephora is now in about 90% of Kohl's stores. So, they'll roll them out in more of them, but it's just not going to be nearly as many as they rolled out, right? So that sort of like headwind from incremental competition will be a lot less in terms of incremental competition, right?
Yep.
The second thing is that expectations for Ulta, and when I say expectations, I'm talking specifically about earnings, have come down a ton over the last several months. So in other words, like I'll put some numbers around this. So in April of last year, the consensus estimate was that Ulta was going to earn about almost $30 a share. The consensus estimate is now less than $24 a share. And what that's important is that, stocks tend to outperform when they're beating estimates, right? Like, that's what folks want to see. They want to see beats and raises. So by setting the bar lower, it makes it easier for Ulta to jump over that bar. The other thing I really like about Ulta is, they generate a ton of free cash flow, and they very aggressively return that free cash flow to their shareholders through share repurchases. And generally, share repurchases are accretive to earnings per share. So in other words, the more shares you buy back, the higher earnings per share. Because remember, earnings per share, it's earnings divided by shares outstanding. So the fewer shares outstanding you have, everything else being equal, the higher your earnings per share.
Yep.
So that is definitely a name. And by the way, and I'm just basing that off of the setup. I'm not even factoring in, potential macroeconomic, tailwinds, to your point. But certainly, those would help as well. So Ulta is a name that I definitely think should be on people's radar screens. And then, so circling back to a name that you brought up, but we haven't really discussed, Academy Sports and Outdoors. So Academy.
I was getting ready to go there. So
it is one of my.
I'm glad that we finally agree.
for now. Sorry, once again, it's supposed to be inside voice, but yeah, okay. So it's one of my top ideas for 2025. And here's the way I kind of think about this stock. Okay. Well, first off, just let's take a step back. There's probably a lot of people on this call who are very familiar with Dick's Sporting Goods, right? Like Dick's Sporting Goods National Retail, great retailer. Academy, think about Academy as Dick's Sporting Goods for Trump supporters. Okay. And
so like Duluth.
I mean, kind of, right? Like, in other words, like there is.
I've never heard it described.
And by the way, I've said that to management's face. Okay, I've said it to their face, so I'm not throwing shade behind their back. I've said it to their face. Okay, so what I mean by that is that there is a lot of overlap. Like, yeah, you're gonna find your apparel and your footwear and your and your team sports, your sporting equipment, but where Dick's is much more focused on footwear and apparel and team sports and golf, Academy is much more focused on outdoors. So they have
like Duck Dynasty type.
Pretty much. I mean, no, I'm talking camping. I'm talking
camo.
Hunting. I'm talking firearms. For hunting and also for personal defense.
Right.
And by the way, and also generally a lower income consumer, okay, particularly relative to Dick's, okay?
Yeah.
So where Dick's has had positive comp store sales pretty much for the last 3 years, so post-pandemic, Academy's actually had negative comp store sales. So in other words, they're basically just think about their sales have been declining. Now, a lot of the reason their sales have been declining relative to Dick's, it's a couple of different things. Well, actually 3 different things. Mm-hmm. One is that, like I said, they do cater to a lower income. So I'll just put in the chat. Make Dick's great again. Okay. Paul's got jokes in 2025. Paul Sue's got jokes in 2025.
Hey, yo.
Anyway,
back to ASO.
Anyway, okay. So, all right. So part of it is the fact that, ASO does cater to a lower income consumer who has been much more impacted by inflation relative to a higher income consumer. So that's one thing. Mm-hmm. Second thing is that a lot of the products that ASO sells, so think about like bicycles or like, I don't know, canoes or something. Like if you bought one of those during the pandemic, you're not buying one of those again anytime soon, right? They're still, dealing with the, sort of the hangover from that.
Overhang.
Right. And then the third thing is that, 2 of the hottest footwear brands right now overall are On and Hoka. Okay. Dick's sells On and Hoka. Academy does not. At least not to this point. Okay. So those are some significant reasons why there's been this kind of delta. But here's the beauty, and here's why I like Academy. Academy's price to earnings multiple off of 2025 earnings, it's about 8 times earnings. That is incredibly low. And by the way, so Dick's is probably like around like 15 times. So the differential is about 7 turns. Historically, that's been like 3 or 4 turns. So to say that 7 turns seems excessive to me. The other thing is I do believe that 2025 is the year that Academy's top line starts growing again. Yep. And I think that's going to be driven by a few different things. One is the fact that when you have negative sales on top of negative sales on top of negative sales, unless there's some secular issue with your business, it makes it really easy to have positive sales, right? Because you're in other words, you're growing off of a lower base of sales, right? The second thing is that Academy just announced that they will be getting higher end Nike products in about 140 stores, so about half of their store base in April. So to be clear, Academy sells Nike products, but they sell the lower end stuff, right? Think like $60, $70 basketball sneakers, not the $150, $200 Jordan brand basketball sneakers, right? And we think we're pretty sure they're going to get a lot more of those higher end products. And so that's going to draw an incremental traffic into their stores at a higher average ticket, right? And then the third thing is that I do believe when On and Hoka see that, oh wow, like Nike decided to sell Academy these higher end products, maybe we should finally sell our products in Academy. So I believe that Academy getting On and Hoka, it's not a matter of if, it's just a matter of when, and when could be 2025. It doesn't have to be 2025, but it could be 2025. The final thing, and this is similar to what I said about Ulta, that we really like about Academy is Academy generates a ton of free cash flow, and they return that free cash flow to their shareholders, both through paying a quarterly dividend, but also through buying back stock. Like the way I sort of think about Academy very simply is, they're priced for not perfection, they're priced for imperfection. So we've seen a lot of quarters where like they miss on the top line. So they miss the consensus estimate for top line. They usually beat on earnings. A lot of times that's because they buy back a ton of stock. Yep. And the stock price doesn't really go down a whole heck of a lot because their price, the multiple is so low, right? They're priced for imperfection. And so I really kind of feel like the downside, risk is maybe, it stocks like 55, 56, maybe, goes down to 50, at worst high 40s. The upside is, okay, if you see that positive comp, that 8 times probably goes to 10 times, on, call it $7 or so in earnings. So, maybe it's $5 of downside versus $15 of upside. So 3 to 1, upside to downside. That's a pretty darn good ratio. So
what's your price target that you set for ASL?
My price target is $77 on that one. So that's
okay.
Yeah. So it's call it like 11 times my my 2025 EPS estimate. And by the way, I think there's probably upside to that estimate. So those are
probably like I'm looking at it so I pulled up a chart on it and I was looking at what you were saying. And so I definitely see where you see the 77, and then I could definitely see the upside potential beyond that to about 84.
Yeah, no, that sounds about right. That sounds about right. So those are some names, but we've had a really productive conversation here. I know we did. We had
to get past like some of the.
No, we did. But now it's going to get shady. Okay, it's going to get shady. Okay. Because we have to. No. Okay, look, we'll talk.
No, I'm joining.
Knowing that I was put him on the shades. Let's get shady. Okay, MASA, make America shady again. Okay,
let's do it.
That's what I'm talking about. Look, okay, I want to keep this relatively brief, but it needs to be said. Okay, I went back and I listened to. When I was on here the last time 2 years ago, and I was talking about some stocks I liked and some stocks I didn't, and some of the ideas worked and some of the ideas didn't, and that's my
life.
JOB, right? Exactly, that's life. One of the stocks that I talked about was Bed Bath & Beyond. Oh yeah. We're not going to talk about the G word, but we're going to talk about the B word. Okay, and we're going to talk about that because that same motherfucker who is the savior of GameStop was supposed to be the motherfucking savior of Bed Bath & Beyond. Okay?
Where is he at?
Where's he at? No. Better yet, where's Bed Bath & Beyond at? Oh, that's right. They ain't around no more because they went fucking bankrupt. Okay, and who has 2 thumbs? Who has 2 thumbs and called that shit? This guy, okay?
Anthony Chukumba. Have we met before?
This guy. No. Okay, no. Look, okay. I am sure for the viewers at home, this is like, where's this all coming from? Like what's going on? Like, why is he talking about this shit? Okay, he's talking about this shit because
he took a lot of slack. He took a lot of hell.
Motherfucker was tweeting about me, okay? This motherfucker is a billionaire and tweeting about me? Like, don't you got nothing better to do? Okay? So look, once again, I got to keep it real, okay? I got to go back to that place. I don't want to go back to that place. I done a lot of therapy, so I didn't have to go back to that place, okay? But when Mark starts getting shady right off the jump, it takes me back to that place, okay? So once again, let's go back to that place briefly.
I'm on the same team.
Let's talk about why we are here. We are here to close the wealth gap between African Americans and white people. Okay, real talk, right?
Yep.
The way we do that is by having conversations where we talk about the economy, where we talk about, stocks that we like, where we talk about investment thesis, where we talk about all these things, all these wonderful things that you guys are doing. Here's how we don't get there, okay? By investing based on fucking memes, okay? Investing based on fucking memes, okay?
Facts.
And by the way, let's talk about another motherfucker, okay? A motherfucker by the name of Roaring Kitty, okay? Oh no, I went there because here's the thing, okay? And there was a whole movie made about this bitch that I was in, okay?
Yeah, I remember that.
Dumb Money. Okay, and Paul Dano played Roaring Kitty, and Pete Davidson played his brother, and blah 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 blah. Okay, when Roaring Kitty originally, started talking about GameStop, he had a fundamental thesis. Okay, by the way, was completely wrong, but he had a fundamental thesis. He thought, these new video game consoles were going to come out. So we're talking about the, PS5, the
Xbox and everything else,
right? And they were not going to be all digital download. They were going to be physical games, and everyone's underestimating that. Now, the one thing that he did have right, he saw that there was very high short interest. He thought there was potential for a short squeeze. Okay.
Yep.
The short squeeze happened, not really for why he thought, but the short squeeze happened. He made a lot of money. Then he got hauled in front of Congress, okay? Because it turns out he was doing some shady shit, okay? Because he was a registered investment advisor. Shouldn't have been making fucking YouTube videos about that shit, okay? So he disappears for a while, right? He disappears. One day, I'm literally sitting there, and I really tried to put GameStop. Yeah, I really have. I have. And suddenly, one of my colleagues is like, Roaring Kitty is going to do a YouTube live.
Weren't you on a set when that happened?
We'll get to that part. Okay. And I literally are you fucking kidding me? Why? What the fuck is going on? So this dude does his YouTube live, right? And his fundamental thesis, gone. He literally says to everyone, here's why you should invest in GameStop now. You should invest in GameStop now because I believe in this Canadian motherfucker. Okay. No thesis, no nothing, okay? And every motherfucking thing that Canadian motherfucker has done has failed miserably. Remember NFTs? Remember them going into e-commerce? Remember, it's all the motherfuckers done is raise money to forestall the inevitable. So you know what? Roaring Kitty, you used to do fundamental work. Now you're just like, we're just going to trust this Canadian motherfucker. So fuck you too, okay? So you know what? I'm really sorry. Hopefully there weren't a lot of kids listening to this. I had a lot that I need to process and get off my chest. So I got it out. I did my rant. I did me. Okay. And by the way, because this shit comes up. Oh, Anthony must be on cocaine. Come on, man. No, I'm high on life. Okay. I'm high on life.
Let him know, Anthony. Let him know.
So that's what it is. So I apologize.
So did you fully get it out of your system?
I fully got it out of my system.
So if I say something, it won't trigger you moving forward.
I had to do it. I can't guarantee that. I can't.
I mean, because look, if this sounds like this is a FAFO season. So this sounds like this is really a fuck around and find out season. And honestly, I just found out. And the crazy part about it was I wasn't even the one that was causing any of the stress. I'm literally trying to help you out, my guy. Okay, so check it. And here's the reason why we're honestly, this is an unfiltered episode if you haven't realized, people.
Right.
And the reason why it's an unfiltered episode is because one, sometimes you reach that point where it's you just need to literally take that lap. And it's kind of interesting because look, this felt like a whacked out murals, mixed with Euphoria, mixed with the They Not Like Us, a whole type of mixture. He literally just said, look,
that's right. I'm Kendrick Lamar, and that Canadian motherfucker is Drake, okay?
Wow.
They not like us. They not like us.
I'm just saying, Drake is out here suing creators. So look, if you want to come my way, come for the king. You better not miss. I'm just gonna say, look, the reason why Anthony is out here talking his stuff is because of the fact that he deserves it. I mean, the man is literally class personified. He's definitely certified in what he says. I mean, he backs up what he says. He represents one of the most reputable Black investment firms in the country. Right. So honestly, like, look, I ain't got nothing to say here. So at this point in time, like, look, when you sitting around like, you know, older cousins, it's like, look, man, look, when they talk, you listen. And ultimately, that's what I'm doing.
That's right.
No, I ain't gonna lie. I had a little flashback.
I bet. Don't buy physical crypto. Buy IBIT. IBIT. And ASO and Shopify and Ulta. And remember, they not like us.
I mean, you know, I got you on the IBIT, and I got you on the Shopify, I got you on the ASO. But, you know, is it really crypto that you really bought? You know what? I'm not going to rehash an old wound. I'm not going to go there. Like, Anthony, thank you so much for rocking the mic, rocking the stage. Like, final words, though. Like, real talk. I'm gonna like, it's rare, but honestly, like, it's rare in these occasions, but I want you to give the people the final word, Anthony, as we go through 2025.
Yes.
What is it that you like? And we're at the very beginning. Like, literally, like I said, we're only 21 days in, and we've seen a lot of shit. So, like, I'm gonna let you set the room for us moving forward in 2025. So it could be a challenge, it could just be your thoughts, it could be words of encouragement, whatever it is. You take the floor, brother.
Sure. I mean, look, a couple things in terms of what we're talking about on, you know, on this podcast. Like, yeah, keep doing the work, keep doing the fundamental work, keep learning, right? There are so many resources that are out there. I mean, this show is a resource, but there are a ton of resources that are out there. So keep doing it, right? Like I went on the show for the first time. It was years ago. And you guys have continued to do what you're doing, and you guys deserve all the credit in the world. I mean, you guys as a host, but also the cousins, quite frankly. In terms of this other stuff that's going on, I'm not going to make a political statement. I'm just saying, like, keep your head up, keep fighting. Like, it's always darkest before the light, but the light will come. And look, we all need to figure out what part of history do we want to be on.
Yep.
Okay. And you can take that any way you would like, but you know what? Keep fighting. Don't give up. They, whoever they may be, want you to give up. They need you to give up. Just don't do it. Refuse.
And I couldn't have ended the show on any other great words. Thank you so much, Anthony, for rocking with us. And don't make us. And honestly, this isn't a goodbye for Anthony. I mean, look. We got a part 3 lined up at this year's summit. So, I mean,
oh, hell yeah. Oh, I'm there. I am there. You don't have to ask twice.
Listen. So it is what it is, and that's what it's going to be. So thank you so much, though, brother, for just blessing the stage. Jolene, you're amazing as usual.
Thank you.
Appreciate you. For each and every single one of you, if you like the video, go ahead and hit the like button. We definitely want to hear your comments. If you got questions for Anthony, leave them down in the comment section down below. We'll definitely get the questions to him if he doesn't see it himself. And we'll definitely be having him back again before this year is out. And of course, Summit. So
in person.
Until next time, I'm Mark Monroe.
Go ahead, Anthony.
They not like us. I'm Anthony Chukumba, the keeping it real cousin.
And I'm Jolene JC, the place to be, aka the 92%.
Listen, I don't even know where to go, but listen. And this has been your come up. We will see you guys in the next one. Peace out.